what some of the craziest moves were, then reverse engineer why they started. The newest catalyst that sets off some of these really big moves. What was the catalyst that set it off? What was special about that catalyst, and how could you have captured that move? I think the number one thing for any new trader is always.
It's Abdullah here in Las Vegas at Traders for a Cause. I'll be interviewing a few millionaire traders to get their best advice for you guys.
What is the structural nature of the market, right? Momentum is a structural tendency of the market. If you start making money from one of the structural tendencies, you're going to build a long-term edge.
There's no easy answer to this. You got to put the size on, feel it, and then work your way through it.
I drew down like almost $2 million within a week, like $1 million a week. Money-wise, it's big, but for me, I think about it all in terms of risk-reward relationship.
We've got some major names here, traders you might have been following for years.
With athletes and with traders, people are looking at the outcome, but what they're not seeing is all the practice hours that a basketball player takes.
So stick around, hit that like button, and don't forget to subscribe. Let's dive in.
Yeah, I'm Jeff Holden with S&B Capital.
Okay.
I'm the head of trader development at S&B.
If a trader had to focus on one thing in the very start of their career, what would it be?
Scalping. When we talk about scalp, we're talking about very distinct price action setups that, as we said before, occur for a reason. They are very clear patterns that have a reason why they will work. It is because of the participants involved in that stock on that moment for our scalps. If you're starting with scalping, you're going to learn every way that you can execute a trade consistently, and you're going to get more reps than somebody else. So if you're starting out as a trader, it might feel weird to say I'm going to start as a scalper and then I'm going to progress into a swing trader or options trader or Forex trader or whatever. It doesn't really matter. Start as a scalper because you're going to get the most reps in the most impactful way possible.
Yeah, for those that don't know Jeff, he's helped a lot of traders, especially those that are trying to get into scalping. So when it comes to stock selection, maybe, what are you normally looking for?
First of all, you have to identify what trade you're looking for. You can't just like go and say, I'm going to be a scalper and I'm going to trade the price action, because you won't actually have edge. You have to understand why the pattern's happening. You have to understand what the pattern is. And then when you put those pieces together, you can really identify what's actually happening and driving the stock. If you can identify what's driving the stock, maybe it's like an institutional buy program, right? If that's driving the stock, you actually have edge as a trader, because you can recognize when that program's kicking on, you recognize how long it should last and when it should be done. If you're just trading random price action, you don't have any edge. So like the big question you have to ask yourself is, why does this trade have edge? And for us, we use technology to alert us to very specific opportunities that have edge, that we know have edge, and are alerted to us all the time.
So for the person that doesn't have the technology, are they looking for news catalysts? Are they looking for certain things on the tape?
Yeah, that's a good question. The easiest way to do it is we talk about catalyst, setup, and trade, right? There are really only about 6 or 7 trades you're actually going to look for. It takes your universe down from all these potential things that can happen down to a very small number of things that can actually give you edge. And so that's really what you're looking for. So if you don't have the technology, you have to understand kind of the catalyst, the setup, and then the potential trades. And then you're just sitting there waiting for kind of, we say it, for it to hit you between the eyes.
Yeah.
That this is actually what's going to happen.
I want to introduce this gentleman, amazing person. I met him in New York at the S&B event. And he gave me some wisdom that I had never heard before. Literally, I've scoured the internet, I've read books on books on books, and I think it's his unique positioning and experience that allows him to give some key insights that you probably won't get anywhere else.
Carlton, Bryan. I'm from S&B. I've been with S&B since 2009. So I've seen a lot of different markets. I've seen a lot of different cycles. I've seen a lot of different traders. Again, so I've seen many different things over the years in itself. So I feel like the skill sets that I've built have been from the years and years of experience.
Starting off, for a trader, what should they hyper-focus on when it comes to risk? What's your advice?
What you should do when you're first starting out is, again, if you're trying new strategies, always start on demo or paper trading itself, starting small with the smallest amount of risk possible. I think you had asked me before, is like what type of risk that you should start with. The most minimum amount, because for someone that say has like a 100K account, okay, they're risking, let's say people say on interest rate of 1% or 2%. Doesn't necessarily apply to someone that is like a new and beginning trader, right? That probably has like $1,000 account or And if you're using 1% or 2%, that's like $2. That's not being realistic here, right?
The average trader watching, independent, they're at home, maybe they have a 10K account, 15K account, maybe a little bit above PDT. How do they determine the daily stop?
So that 15K, what you want to do, you want to understand that when I speak with traders and work with traders, or give any recommendations, it's probably going to take you, if you have like all the pieces in place, it's going to take you about 2 years to get consistent. And that's if you have everything together, right? So you have to understand that you're going to need to, understand it's going to be a 2-year process, and I'm going to need to stretch 15K over 2 years, right? So what you're going to have to do is set your daily stop for yourself. You're going to have to set a weekly stop for yourself and a monthly stop for yourself, right? And if you hit any of those stops, you automatically cut your risk by 50%. And in order to scale back up or get your stop back to where it was originally, you have to make back what you lost. So you're always in a way of, again, cutting your losses. They're getting smaller and smaller and smaller. So it's like a faucet. You're reducing the amount of water coming through, reducing the amount of water coming through till it's drip, 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 till it's nothing. And then you can't get back to where you were at the previous step until you make back what you lost. So again, in that sense, with that system there, you're stopping yourself from drawing down and giving yourself a higher probability chance to make it through that learning curve. Because that's where I see a lot of people fail. They run out of money before they get to that, they turn the corner with their trading. So it's really important, for as far as on the risk management side, to stop the bleeding as soon as possible. It's like you triage. Again, when you're having any trouble with your trading, stopping that drawdown.
I have a special guest for you, someone that I've wanted to interview for a while. I like to call him a doctor because of his philosophical side when it comes to the markets.
Yeah, my name is Pradeep Bonde. I'm the person behind StockBee. I've been trading for 24 years, and my style is primarily swing trading, momentum stocks.
There was one thing that really stuck out to me, the core mechanics, like the intrinsic mechanics, the fabric of the market. In an article where you said that we should understand the structure of the market. Can you talk a little bit about that concept?
You have to understand, for anything to work, what is the structural nature of the market, right? Momentum is a structural tendency of the market. Any country you go and you see a stock market, that's how the market operates, or what is called as a post-earning announcement drip. That is, if a company comes out with earnings, and if the earnings is good or bad, the stock will move in the direction of that good or bad earnings. Or whenever there's a volatility contraction, it's going to lead to a breakout or a breakdown, right? If you start making money from one of the structural tendencies, you're going to build a long-term edge, because that tendency is not going to go away in our lifetime. Momentum is not going to go away in your lifetime. Fits is not going to go away in our lifetime. In order to be a long-term build edge, you need to find something so inherently structural that is the way the market always operates.
Would you say that certain markets have lower barrier to entry when it comes to the way that the structure of those markets? For example, maybe in the Forex market and currencies, you may need a broader catalyst, so those you have a smaller opportunity set in those particular markets. Can you talk a little bit about that?
Yeah, see, every market is different. The Forex market tends to have longer term trends. They need to react very fast to events. So certain event-based strategies work good in that market. But the stock market is where the biggest opportunity is, because there are so many stocks and so many time frames on which you can trade. So typically, many traders, when they transition from Forex or something else, they get into stock market. And today, the cost of trading has come down, and the kind of capital required is also low because of the options have become very popular, the zero-day options and the short-term options, weekly options. So there are opportunities for anybody who wants to get into it, provided they have the skills and they have the setup.
Can you talk to the trader at home about maybe a methodology that they could use in order to do their own research while building their edge, building their strategy?
So one of the ways in which you can build an edge in this industry is studying historical patterns, right? And basically, so what you can do is take any pattern, like say bull flag or a reversal or any pattern, and study 3,000, 5,000 examples of it which has happened in the last 2 or 3 years. And to do that, the simple way is to just go and take a list of stocks, start from stock A going up to Z stock, and just look at every single chart for the last 1 year, mark it down, where there was a bull flag, what happened after that, how many days did it go up, what was the magnitude of that move, and things like that. And when you do that, you're going to build a deep understanding of that particular chart patterns or a deep understanding of that particular market structure, and then that allows you to real time, when you see a pattern like that, your brain automatically gets trained to see it and trade it.
What characteristics do the successful traders have in common?
The number one characteristic is they have very high self-leadership quotient. So they are like self-made, or they have that ability to find solutions to their own problems. And that's the number one thing which separates the successful from the unsuccessful traders.
My name is Dr. Jonathan Katz. I'm a performance psychologist and performance coach, doing a lot of work with high-performing traders and athletes and financial folks.
Can you just talk to the independent trader at home, maybe suggest a few things that they could focus on in order to become better traders, or in long term become a successful trader?
Yeah, because with athletes and with traders, people are looking at the outcome. They see the games that LeBron plays, or they say the results that kind of a Lance or a Nate has. But what they're not seeing is all the practice hours that a basketball player takes. And it's the same thing with trading. You just don't see kind of the work that goes on solo behind the scenes. And I think the key is just to focus on what you can do to try to get better each and every day.
Can you talk a little bit about maybe some other things that are important that will help you keep the foundation intact?
Sure. I think lifestyle variables are hugely important. Sleep, exercise, nutrition, hydration, because if you don't take care of your body, your mind is not going to work as effectively. And the other advantage of that is that those things that I just mentioned are in our control totally. As a trader, there's a lot in your control, but you're not in control of the markets. Life is short, and so you want to not sacrifice some of the more connective tissue aspects of human connectedness and relationships and family and people who have children. It's easy to point to the hard work, but don't do it at the expense of other things that are going to make you happy and content in your life.
My name is Kyle Williams. Been trading for about 8.5 years now. Started trading in college as a sophomore. It was a rough start naturally from anyone else, like the learning curve, I had to go through it all. But by the time I had graduated college, I was making more than any entry-level job would have paid me, and that was during COVID, which then only got more insane for anyone who traded that time frame. And so from 2016 when I started to then now, I'm up about 5.5 million or so, a little over 5. Yeah, trade full time, and it's a passion of mine, and I want to do it for the next 20, 30 years of my life. So
now I've seen like circulating on Twitter, even here at the event, a little fear or hesitation with shorting small caps. Can you just explain like what the fear may be, why it may not be such a big thing to be worried about?
Yeah, so with shorting and small caps specifically, if you're going long something, well, technically if you don't use leverage and you just go in with money you have to lose, the most you can lose 100%. The stock goes to zero, right? On the short side, and especially with small caps, you could have stocks up thousands of percent, 10x in 2 days, 3 days. The most I've seen is like 10,000% in a week, right? So it's rare, but it can happen. And so being short that, well, now you're not down 100%, you're down like 900%. So that's the fear and the risk of it all that people immediately can see without even having to be in that position. The stance I take on it, though, it's only risky, though, if you let yourself get in that position. Any strategy you have, long or short, there's risk involved, and there's risk management that needs to happen to be profitable. When I look at some of my biggest short losses, I'm not really even losing even close to 100% because I've stopped out 90% later or ago. It's up 300%, I stopped out 3 hours ago. The biggest part about success, finding your strat, is just surviving that learning curve. The month before I finally found my first glimpse of this could work for me, I took 15 losses in a row. And I only had a 4 or 5K account at the time, and it dwindled down to little under 2K. And if I had taken losses that were double or triple the sizes I were taking, my account would have been at zero.
What makes you unique in the space and helped you survive this long?
For me, it's almost like if I don't know if people heard the quote, if you want to take the island, you got to burn the boats. When I found trading, I knew this was for me, and this was well before I even started playing my first trade. I saw what it was, I saw how it happened, and I was like, this is it. I don't care how long it takes, I don't care how hard it is. This is what I want to do. And even in those moments of feel like quitting or actually going through that learning curve and feeling how tough it was, for me it was well, what would I rather be doing? I hated the idea of doing something else more than the pain of going through the learning curve of losing money. If I'm going to be successful, it's when I'm going to be successful. And so naturally, the universe just stepped out of the side and just let me do my thing and get to where I needed to go in the time that was meant to be. So, yeah. Even now, at where I'm at, I only have maybe 10 setups, and honestly, still 4 of them are probably 80% of the profits. So there's other 6 that I could argue I don't even need to trade. I just am trading them because if I'm there, I might as well take it. Yeah. But they're not going to be the needle movers that really have made a significant portion to my wealth.
I'm here with
Lance Brautstein, the one Lance B.
For the new trader, what do you think are some of the things that they should be focused on when they first come into the game?
I think the number one thing for any new trader is always how can you find edge, and what opportunities is price action that you can take advantage of and not just noise. That's the number one thing to isolate, and I would say the place to start to find that is, whether it's Forex, futures, or anything, stuff with fresh catalysts and news and stuff that's making the craziest moves.
So now, for that trader that's looking for edge, what do you recommend they do?
I think one of the best ways is to reverse engineer moves. So if you don't know where to start, stocks, Forex, futures, it doesn't matter, all the same thing. But find out what some of the craziest moves were, and then reverse engineer why they started. And so what I would do is I would find out, regardless of your instrument, look at those big moves, what was the catalyst that set it off? What was special about that catalyst, and how could you have captured that move? And I think doing that hard work and not having a set map, but trying to figure it out on your own and collecting the data and doing the studying, much like Pradeep did, that's the way to start to find a path for yourself.
Let's say a person develops an edge. What would you recommend they do to really get good at trading it?
I think a really good analogy is, if you think about it, you can have Tom Brady teaching you how to be a quarterback, and no matter what he teaches you, and no matter how good he is and how good of a teacher he is, you still need to do all those reps. If you want to be the best quarterback, or even any quarterback in the NFL, you need to be the one throwing the passes. You need the one hitting the weight room. You need to be the one watching the game tape. And there's no substitute for that. So even if someone is teaching you a good method, or if you're learning a good method, nothing is ever going to enable you to perform unless you do the thousands and thousands of hours in the seat doing the hard work. For the trader, that's going to be studying your trades, writing them up in very, very high detail, doing the hard work to thinking what went wrong in your bad trades, what went well in your right ones, what are the variables across the two. And so it's really about getting the reps, and even if you have a great teacher, there will never be a substitute for that.
Yeah. So you train hundreds of traders. What are some of the characteristics that you find in those that sort of rise to the top?
Yeah, I think it's, you need to be hungry and willing to do the work. Like, there is no easy way out in this game. No matter what, you need to put years in and do the screen time. And I think people underestimate how long that learning curve is. I think the other thing of people that tend to succeed is they're willing to really get into the weeds, right? They're willing to get their hands dirty. There is no substitute for finding the data, for figuring out what's going wrong in your specific trading. The work that is the most difficult to do and the most mentally draining, the work that you want to put off in favor of the easy stuff, that's the stuff that often has the most benefit.
For those that don't know, we did an interview back in March. We're going to have a sequel later this year.
Yeah, it was my pleasure, and I think what led our interview to be so successful was that we touched on a lot of controversial points. And what I'm looking forward to is diving deeper into some of those points, because I think, like, on the internet, a lot of people just take the surface level, and the beauty of these deeper podcast interviews is we can go deep, we can look at all the pros and cons of each side and really shed some more light for your audience who have been so incredible.
Can you tell us your name?
Yeah, my name is Bryan Lee. I'm a former professional gamer turned trader, and I've been trading for probably 8 years, but my professional gaming career was probably about a decade.
Professional gamer before. How did that help you transition into trading?
It helps a lot with the mindset. I think just with any sport, right? You know, you learn how to reflect on your losses and analyze things and just take accountability. I think those are the biggest things.
For a trader that's just getting started, what should they hyper focus on?
I think you want to trade very small. You know, the tuition that you pay is completely self-inflicted. If you want to lose $100,000, you want to lose $100. It's totally up to you. I think you kind of have to stumble your way through and just figure out some of the kinks. You want to learn the language so you're not confused, learn about the technical aspects of your platform. Once you get over that learning curve and things start to make sense for you, then I would really focus on finding edge. Finding edge is easier said than done, obviously, but typically you would kind of find people and things that you resonate with, and then figure out for yourself with some critical thinking, basically by backtesting their ideas, trying to verify for yourself, get it, don't just take anyone's word for it, really figure out kind of, okay, does this actually work and does it work for me? I spent probably a year and a half, 2 years just following kind of fake gurus and stuff like that, and it's not to say that it was worthless, but you kind of learn what not to do or what things people use to kind of lure you in. However, at the beginning, there's a tuition in that, and you kind of have to stumble your way just because of the industry.
Many traders, they don't have access to someone like yourself who's trading with like large size. Can you tell us about one of your larger trades, maybe recent?
Sure. So in my presentation just now, I was sharing about how I drew down like almost $2 million. And at the time, actually before that, it was like, it's crazy, but I was able to do it like within a week, like 1 million a week, like kind of before the end of 2021. I don't have amazingly big trades. I mean, proportionally, money-wise it's big, but for me, I think about it all in terms of risk-reward relationship. So it's like if I risk 1R, I'm trying to make 4 or 5R. My mind doesn't think about the money, so I've never really hyper-focused on it. But at the time, I was risking anywhere between $40,000 and $60,000 per trade.
So how did you start?
So I built up my account from literally 30,000. And in 2018, I grew it to 150, and I blew up most of it. That was off of a couple bad trades where I just kind of lost control. Like the cardinal sin of trading is averaging down and holding losers and things like that. And when I restarted with 30,000, and still took with me the lessons that I used to grow consistently until I started losing my mind. And I kind of, because my back was against the wall, and I knew this was my only opportunity, then I treated it really seriously, committed to a 1% risk on my account, never any more, no shortcuts, compounded that, and yeah, I grew that account from humble beginnings to pretty well.
Is it focusing on the process that helps you when it comes to sizing up, or can you talk a little bit about that?
Yeah, so on my Twitter, I jokingly call myself the R guy, and instead of thinking in dollars, just thinking of it as multiples of risk. It's kind of the most rudimentary way to think about it. If I ever sense any hesitation, I'm going to sit at that level, that risk level, as long as it needs to be, where I accept that risk 100%. I never hesitate. The biggest advantage for a short seller is when all the other short sellers have blown up. People feel greed, they feel exuberance, they feel fear. And if you can detach yourself from that in a way, it's not like I avoid it completely, but I go through it, the mindset that like it's not a big deal because I'm just going to lose what I lose. I'll get caught and I'll clean up after. Some people, they can't deal with those emotions and they just dig themselves into a hole they can't get out of.
I have some really special guests that I'm interviewing today, and one of them I've been wanting to meet for a long time. Just been watching him YouTube on X, and it's an honor for me to have him here today. So just want to start off just having him introduce himself. Many of you already know him, but for those that don't.
My name is Anan. Everybody calls me Lucci. I created this little alter ego, I suppose you could call it, and that's how everybody knows me on Twitter and social media and everything. And I started trading when I was about 23, 24 at an old school prop shop, so it was all tape reading, no charts, nothing like that, and it was just reading, bid and ask, and fend for yourself kind of thing.
So would you say there's a certain market that's easier for beginners to learn?
I think the easiest market to focus on is probably the futures, because it's cheap to get access, and there's a lot of leverage that's being given out for certain types of accounts, and it's only one product. You're only looking at one product, and you're looking at the market as a whole kind of thing. So I think the futures is the easiest. I wouldn't say it's the most profitable in the sense that it's the best product to trade kind of thing. There's more edge in different types of products, right? So equities, for example, or options, there's specific types of edge. They can be really explosive. It can give you those kind of explosive gains and things like that. Remember, it's all about you, what you're trying to extract out of this, your personality. So there's a lot of messing around and tweaking you got to do before you figure this stuff out.
How do you handle the mindset or your ability to size up?
It's a tough science, and it's more of a stomach tolerance and a pain thing versus practical and a strategy kind of thing, right? So even though it's just another zero or another decimal point, to you, it feels a lot more than just another zero and a decimal point from the emotional perspective. How much you can stomach that stuff without changing your bias, without changing anything. Your plan is still your plan. There's just another zero on the screen. It might affect you guys a lot differently than somebody who has a higher pain tolerance. There's no easy answer to this. You got to put the size on, feel it, and then work your way through it. You got to be crazy. I think you have to have a desire for it, and you have to have a want that supersedes all the pain and problems that you're going to have, that supersedes all the opinions that everybody's going to have on you, that supersedes what your family's going to say about you, and it supersedes all that stuff. You have to believe in yourself like no other. Nobody else is going to believe in you like you can. But to get to that level of belief, and in your ability, your knowledge, and all that kind of stuff, it takes some pain, man.
Hey guys, I'm Max Ganek. I've been at SMB for 5 years now. I guess a quick background on just kind of my style of trading. For the most part, I'd say momentum, swing trading, imbalance trading, small caps when they're like super hot.
What are some things that they should hyper focus on, especially in the beginning, in order to become successful?
For sure. So I think that the biggest thing that has given me success is grading my trades. Is to have a really big difference between what your A risk is, your B risk, and your C. Because those A trades is probably trades that you are correct 75% plus of the time. You want to have those moments be the thing that is going to determine your month, quarter, and year. Obviously, it takes time to cultivate what those A trades are. Team trading is a very big part of what we do. Being able to grow and learn and develop new edges is something that I've garnered from team trading. I also think that being involved with people holds you accountable to what your process is and the correct way for going about trading.
What's something that you all are aware of that we aren't tapping into or maybe taking advantage of?
News trading is definitely a very big part of our business. I think that we are hyper fixated as well on speed in terms of getting in and out at the right prices. A small difference in your entry could be the thing between a 5-hour trade and a 3-hour trade. And now if you consider what that does for your overall growth, that's massive, right?
My name is Danny. I'm a small caps trader.
Trader enters the equities market. How do you recommend they find their edge?
I would probably start with taking some trades, not doing it like I did, which was just like a lot of trades, a lot of reps is what I thought I was getting, but what it actually did was it made it really hard to study each trade. So number one, I would try to take less trades, like maybe 10 to 20 executions, entries and exits per day, because then you can actually go back and really study what you're doing. Why'd you get in there? Why did you exit when you did? Was it because you were scared? Or was that an actual good place to stop out? So that's number one, but aside from that, I would just start small, start in a simulator, maybe start trading like 1 to 10 shares. I think the number one thing is don't lose all your money. Yeah. The longer you can stay in the market, the better chance you have of finding your edge.
Can you talk a little bit about like some of your struggles and how you overcame them?
Yeah, I struggle most mentally when things are slow and if I'm in a drawdown. You catch 4 red days in a row, you're like, it's over, I'm done. It's never going to turn back around. So that's probably one of the biggest mental struggles, at least for me. You just have to trust that you're going to find another green day. If you're focused on like making X amount of money each day, that's going to be hard. I think focusing on consistency over time and just trust that the market is going to be there is a much better thing overall, and especially for mental health.
So how has trading changed your life?
That's a huge question. Trading has completely changed my life. I started trading about 5 years ago, and I am extremely grateful to have found that at this point and been able to earn a good living and take care of the people around me. It's a crazy personal journey. Yeah, it's been completely life-changing. I would just say, take it one day at a time and try to get a little better each day. I didn't really think about where I might be going with it. I don't think that I thought that I would be where I am now in terms of like income and the cool things and the cool people that I've been able to meet doing it.
My name is Stan Ivanov. I trade mainly small caps, large caps. As far as it's mainly equities, my main focus is volatility, momentum, and range. So as long as we have these, I'm not really bound by any market category or ticker category, right? You know, I have the avoids and the ones where it gets sketchy, and just make sure I don't land on those landmines. Everything else is managing risk.
For you, small cap trader, you have experience. What gives you an edge over other traders out there?
It's me. I'm the edge. Right? To me, the market itself provides opportunities. Because what you see at 1 p.m. on XYZ is exactly what I see at 1 p.m. on XYZ. Is your lens allowing or aligning to what the market is providing for you? And if so, then you can take advantage of that opportunity.
You talk about why for the trade, but you also, I heard you talk about the why outside of the market, right? So can you talk a little bit about how important it is to have a why outside of trading?
Yeah, of course. I mean, I think fundamentally your why, it's not tied to you. It's not tied to trading or even to me directly. My strongest why is when I'm doing something outwardly focused. When my why is anyone but me. When my why is my wife. Because if my why is me or something that has to do with me, there will come a situation where maybe I'll negotiate. Maybe I'm like, well, I can handle this. It's about me. I can handle it. So I'll just wait 5 more minutes. And then I'll wait another 10 minutes. Maybe I'll add a little bit more size, even though I'm wrong. I put myself in that position. I put myself to give myself an excuse. I create that own environment. And then I'm no longer able to affect change because I'm now a victim of that environment. Whereas if the why comes from somebody else, like my wife, when it's time to do the right thing, there's no negotiation because I know now what's at stake. I'm not negotiating with me, but that's at stake. So I'm not going to add when I'm wrong. I'm not going to take this trade because I just feel like it or I'm bored, because I know what's at stake. The market's only open for X amount of hours, but you can practice the same mentality in something else. You just got to find it, right? You got to find what works.
I hope you enjoyed the tips. To learn more about Traders for a Cause, click the link in the description. You can learn about next year's event as well as to donate to help them continue their mission. See you in the next video. If you want to dive deeper and to hear more information about scalping from an 8-figure trader, watch this video.